On this episode of the Paper Trail podcast, we are doing a get to know your speaker. We are hosting the Paper Trail Conference September 18th to 20th in Chandler, Arizona. Go to papertrailconference.com for more information. And today I spoke with Jay Redding of Cassidy Investment Group. Jay has been in real estate investing for over 20 years. In the last 10 years, him and his son-in-law, who was the one who got him into the note investing space, have been investing in all different types of notes. And recently have been doing a lot more seller financing. So he's going to be one of the speakers on one of our seller financing panels. It was a great episode where we talk about how to be an investor. What are the philosophies? What he's going to be talking about at the conference, give him a little insight without spoiling the entire session, and really just boil down to what the space is about. So hope you enjoy this episode. And also, again, hope to meet you at the Paper Trail Conference. Welcome, Jay. How are you today?
I'm doing fantastic, Chris. Great to be with you.
This is going to be a fun episode because Jay and I go back a little ways, and we also are part of a little group that hosts a monthly webinar as well as talking about notes. So it's always a pleasure to speak with you, Jay. Why don't we, as we get started, have you start with your story and how'd you get involved in note investing in the first place?
Well, I'll even go back a little further. I actually started on the real estate side, as many no investors do.
Like we all do, let's
Like
be
we all
honest, we
did,
all
yeah.
do.
But I did my first real estate deal back in 2004, and then my son-in-law came on board. I think it was right around 2014. That was Kyle. And he's actually the one that got us interested in looking at the notes. He's a very smart young man. He doesn't want to manage rentals for the rest of his life. And that was so the big question is that okay, so let's look at what else is out there besides what we're doing here. And he basically said, I think I have an interest in looking at the notes. It fits more of my personality and everything. So so we started doing some research. Who's the players, who's got experience, who's done this for a while, who's been through, I think this is an important factor, who's been through market cycles, not just who's the hot topic at the time. And our mentors have basically been down to really a couple different people. I know Eddie Speed. All
Yep.
right, he's a mentor, and we've gone through note school, and then also Fred and Tracy Rui, which I know you know.
Yep.
So those have really been the core of who our mentors have been. Of course, I've learned a few things from you as well along the way, and a few other people. So it's not just one person, um, but that's kind of how we got started. And the more we got into it, it's like, oh, I like this. Okay. I mean, I'm getting older. All right. And I have one child. All right. That Kyle's married to. So you know where everything's going. So it's kind of the next generation thing. It's like, oh, this is something I can do until you put me in the grave or I lose my mental faculties. So so that's basically how we really got going. So
No, that's great. And one thing I would mention that you touched upon is the people who you affiliate and associate yourself with, who have been around a very long time and have a very good reputation. People don't realize how small this space is. And if you get caught up in the wrong little click, it can be very detrimental, is what I have found.
yes, it can. So it's we chose wisely, Obi-Wan.
Yes. So what's something about the journey since you started in 2004 and then, Kyle in 2014 really focused more on notes that most people kind of don't know about the space, but they probably should?
Well, let's see here. That wasn't exactly how I thought the question was going to be.
Well, how would you view the question?
Well,
So,
I was thinking of what's something that someone, doesn't really know about me that maybe they should. Okay. All
Okay,
right.
well, let's rephrase it, and I'm going to edit the
Okay.
podcast. So let me
So
make
it's
a thing.
fine. Yeah.
Yep, I want to redo this and say, so what's something about your journey, Jay, that don't most people don't know but probably should?
Uh, Very simple. I mean, I grew up on a hog and dairy farm. Okay. I am a country kid. All right. I was a PE major in college. All right. If
Physical
I can
education.
physical education, yeah.
Okay.
So, um, if I can figure this out, all right, anyone can do this. Is the bottom line.
Mm.
I grew up on a farm. We had 100 hogs, pigs, okay, 25 dairy cattle, and a 200-acre farm is what we basically had. And out in the middle of rural Indiana. And that's how I grew up, and certainly gave me good work ethic. Okay,
Yeah.
obviously, in that respect.
Mhm.
But it's just learning through the process. And so it doesn't matter your background. Is what I'm essentially getting
Mm.
to. All right. It
Okay.
really does not matter. You get with good people, you learn, you got to learn the fundamentals, obviously, and you start growing from there.
So I have two spin-off questions to that. One is,
Okay.
did you name your hogs? Did they have names?
Some of them we did,
Okay.
yes.
And the saying, I guess, that a lot of people like to use is, pigs get fat and happy and hogs get slaughtered. That literally probably, was
Very
very
true.
true.
I know that very literally.
uh,
Because
so,
you know where we got our meat.
yeah. So, um,
Oh
so
gosh.
as people invest, and everyone's got different philosophies, but
Sure.
most people usually stick by one philosophy that they go by. If you could boil yours down into one sentence, what would it be, and where did it come from?
Okay. I am very conservative by nature. All right. And as a result, I learned this comes from the real estate side. Um, Always have multiple exit strategies if the deal doesn't go the way you have it planned. All
Mm.
right. On the real estate side, we always planned at least 3 exit strategies, and that has protected us unbelievably well over the years. Um, and the same is in notes. You got to figure out, okay, how am I protected? What's the worst case scenario? And if everything else about happens better than that, then we're good. So it's the preservation of capital first, and then it's the return on capital second, to make sure that you've got multiple exit strategies that will protect you.
I always like to look at it a little different light of when people say they're either more conservative or they're more aggressive. I look at it the other way is you either truly understand risk, or you kind of don't, or you do, but just ignore it, is really the way
Yeah.
I look at it. And as you get older, you understand risk more because you've been burned more. So people will
Sure.
say, oh, you're more conservative. It's like, no, I just understand risk a lot better and realize,
Yeah.
like, do I really want to take that risk on this one, or, what you
Yeah.
want to go through? So,
Well, and the other
mhm.
thing would be, as you get further down the road, you don't
Mhm.
have time to recover. That's the thing.
Yep.
All right. Someone that's of my age group, and obviously in talking with
Mhm.
a number of people, I mean, their concern is like, okay, if things go nuts in the market, all right, unlike with the Great Recession, it took 8,
Mhm.
9, 10 years just to get back to zero. I
Mhm.
may not have that runway. And it's
Yeah.
like, yeah. So you
Mhm.
as you do get older, your wisdom starts to come and
Mhm.
evolve because you've gotten burned along the way. And it's like, nah, maybe
And
not.
and you care more,
Yeah.
because
Yeah.
it's got bigger consequences.
It's right. It's right.
But as part of that, what's a principle you live by in business that kind of guides the way you treat your vendors, your borrowers, your partners, your investors? I know you raise some capital, you have some investors as
Mhm.
well. So what's kind of something you live by as a principle?
Very simple. Integrity.
Yeah.
Do what you're going to say you're going to do, and do it in the time frame that you say you're going to do. It's that simple.
It's Mine's the same way, and I literally had that same call with somebody yesterday that we are arguing over something that, I mean, this wasn't even like a gray area of a contract. It was black and white as black and white could be in regards to a specific item in the scope of work. And the person's like, well, I didn't, kept trying to rephrase their words to try and find a way so they didn't have to do the work. And at the end of the day, thankfully, I hadn't paid them for it. And I basically told them, like, you know what? Fine. Let's just walk away. You go be you. I do me, and go on our way. And
Yep.
now that person is on their way, but they now kind of, I think, have some regrets, and are now trying to like come back and save it. And to me, it's like, no, you said you're going to do something, you didn't.
And you didn't. That's right.
Called your bluff, and
Yeah.
now it's like you want to try and kiss and make up. Sorry.
Yeah. And one additional thing, do it to the best of your ability.
Yep.
That's the other thing. So
yeah, just do what you're going to say you're going to do. And
yeah,
sometimes, what hits the fan, and just be honest with people. And
exactly.
bad news is never pleasant, but I'd rather have somebody know bad news sooner rather than later. So,
well, and if something goes screwy, okay, and it's bad news, okay, bring it, let's talk, let's work through it. Okay. If we're on the same page, we're trying to go the same direction, and something's just happened that screwed everything up, there's many ways we can work through things. All right. And things happen sometimes. You just have to deal with it. But man, be honest. So that's the bottom line. Know who your counterparty is. That's the other thing. All right. The integrity of your counterparty.
So literally, before I jumped on this call 1 minute late, because I was actually on the call with my attorney going through a loan sale agreement that, let's just say, the way the loan sale agreement is written is, if you ever have to go back for them for anything, whether it's a allonge that was missed or screwed up or any type of document, my attorney's like, recognize you are not going to get it, and they're not obligated to give it to you. And I'm like, why would I sign this contract? He's like, that's a business decision, but based off of how you operate, I wouldn't envision
you
that
would
you would
not
execute this.
Yeah.
Okay. So let's talk a little bit about Paper Trail Conference that
Sure.
I was, I don't know if I was drunk when I agreed to this or what not to do. It's been in the back of my mind at times, and, basically kind of has formed in different circles and stuff. But, a little bit about, for people listening, what my accomplishment, or what I'm trying to target, is I haven't really seen a conference that focuses on the three main aspects of note investing. Now, I'm a non-performing note guy. That is what I am. I am not a seller finance guy. Private lending, a little bit in my wheelhouse, but not I'll call it, not something that I'm the expert in, do as part of my entire business process. And I've seen a lot of people over the last year or two jump around into the different avenues of that. And I wanted to just bring everyone together to kind of let people decide what it is, because I'm on bigger pockets and I see people doing, oh, I want to do this, I want to do that. And there's not one place you can go try and talk to people and learn. So, that's why it's important for me. I'm curious why it's important for you to be a part of this event and a speaker. And I know your response is going to be because Chris is awesome and you just want to be a part of something that I'm a part of. But outside of that, why is it important?
That, huh? Okay. Well, I first of all, I would clearly say I respect you, Chris, and I've always known you as being a straight shooter, and you call BS when BS needs to be called, and sometimes that gets you in trouble, but that's okay. I can live with that. So
sometimes a little too much trouble, but not too often I do get sued. So.
But why it's important to me is I want to be associated with people who have great integrity, who have good at conferences. I like I am an educator at heart. Okay, I do have a teaching degree. All right, but it's now gone way expired a long time ago, like 50 years ago. But I still have that at heart, and I do like being able to teach and help people grow. And I was also I was a track and field coach. Also, that's another side note. But I coached Division I track and field for a few years.
Oh,
so
where?
Kent State University.
Okay.
So So I guess that's in my blood to a certain degree. So I enjoy that. I want to be associated with great people who have great
Mhm.
integrity and run good businesses. And I'm sure you'll put on a very good conference. I have no question about that.
So one thing you mentioned again about the education side is I know you provide, you host, I think, like a
Well, we
webinar.
do, yeah, we
Yeah.
do a note talks with Kyle and Jay. We do it one
Yep.
time a month is what we do. It's kind of our give back is what it is.
Yep. And you also, I know, drop note nuggets, and
Yeah,
stuff all the time.
tidbits,
So
note tidbits.
tidbits, that's right. Yep. Note tidbits as well.
Yeah,
Apologize. But, and again, for people who are listening and trying to, again, either gain more experience in the space or learn a specialty or skill, the more people you can connect with and learn from, the better off you are. So,
sure,
Jay will, all his information will be in the show notes. So, I recommend give him a follow.
sure.
Okay. So without spoiling, your whole session, and what's one thing you hope attendees, will either feel, learn, or think differently about after hearing you speak and provide them this great content that you're going to provide them?
Well, Chris, as you say, we all come from different niches. You're an NPL guy, okay?
Mhm.
I'm a seller finance guy, okay? We've done a bunch ourselves. We buy. I'm comfortable in buying seller finance notes.
Mhm.
I appreciate in helping people to improve their quality of their notes so they don't have to take as big of a discount. All
Mhm.
right. So my goal is I hope to help people, particularly house buyers, wholesalers, fix and flippers. I hope to be able to help them to raise their game.
Mhm.
Many of them do not realize the value that a note investor can bring to them. So I
Mhm.
hope to be able to share with them, all right, how we can come in and help them recapitalize, but we can only help them recapitalize and go do another deal with them keeping part of the deal on the back end that they make more money over the long
Mhm.
term if they create a quality note. So my
Mhm.
hope is that I can show them how we can help them to recapitalize, the importance of having a relationship with a note buyer and giving us the opportunity to help them elevate how they're creating the notes so that they don't have to
Mhm.
take nearly as deep of a discount and help propel their business forward as well.
No, it's awesome. And I know people will get a lot more out of the session, but no, as a high level, that's what people look for,
Yeah.
honestly.
Yeah.
So,
So
um,
that's what
yeah.
we hope to deliver. And I know Tracy, Rui, and we've been talking back and forth. She's kind of
Mhm.
running the seller
Mhm.
finance part. So I
Yeah.
don't know what the final how it's going to look, but I think we're probably just going to have a discussion. Is what I think we're going to do. I
Okay.
don't know. So
Yeah. Yeah, we're trying to, again, shape it where, there's discussions that people can have that are real world discussions. And then we're gonna have some workshops too, where,
sure.
gonna ask people, break open that notebook and, but put on your thinking cap and stick that cell phone, kind of, in your pocket because there's gonna be a fire hose of information getting thrown at you, especially for a few of the ones that I'm gonna be doing. So,
It'll be
uh,
good. It'll be
yeah.
good.
Okay. Now, you've worked with all kinds of investors, good, the bad, the ugly, the indifferent. In your mind, what makes a great investor in your opinion?
Um, well, first of all, you got to decide whether you want to be an active investor or whether you're going to be a passive investor. There are two profiles of two totally different type of investors and personalities, et cetera. If you're going to be a passive investor and want to leverage our skill sets, when I say I mean mine, yours, et
Mhm.
cetera, okay, our skill sets, our connections, all right, our sources, and our knowledge, that is great. Okay. And if you're busy with your career, you're busy with your profession, you run a business, all right, you're retired, you just want to earn a great income, all right, and get a good return on your money. We're handling all the heavy lifting in that respect, and let us handle it. Okay,
Mhm.
and but don't expect the same type of returns, all right, as if you're
Mhm.
taking all the risk. All right, that's really important to understand that difference. Now, if you're an active investor and you're wanting to get in and develop the relationships, all right, it's going to take some work. It takes time to develop relationships with people and with organizations that have the notes that they know that you're real and that you can perform and you're going to do what you say you're going to do, because that's absolutely the surest way of slitting your throat in this business, to say, hey,
Mhm.
I'm going to perform, and then you back out the last second. You
Yeah.
just kissed your credibility goodbye at that point. So but that's a different animal in that situation. All right, you can earn the higher yields, the higher returns. All right, but you got to get knowledge. You got to get knowledge from credible sources, the people who are in the trenches that's doing it and learning, and be patient in learning that. Even be
Mhm.
willing to mirror and not do anything, but just kind of be a sponge. I've been
Mhm.
fortunate to be a crumb at some pretty big tables and not, just soak up the knowledge, man. Just soak it up, and you got to be willing to pay your dues along the way to be able to do that. So
Yeah. Yeah. For me, I define it kind of, within one word, and I'll use authenticity. And
authenticity, be real. Yeah.
yeah, that's exactly what you just outlined is figure out what it is you want to do. Do you want to be active? Do you want to be passive? Don't just because I'm doing something or you're doing something, like what you're doing and I'm doing are very, very different
Oh, big different.
because,
Yeah.
but it works for you. What
Hmm.
you do kind of wouldn't work for me. And maybe
Hmm.
it would, but maybe I'd be bored. Or you might look at what I do and say, you're nuts. That would be boring to me. It's got to be something that you enjoy to do, but don't try and to pretend to be somebody or something you're not, because that's where this whole FOMO comes into play.
Right.
And kind of roll into the next question of what's one mistake you see newer investors make that you try and help them avoid.
I think there's two, and I would say we were a little bit part of this also. We just couldn't figure out the strategy that we wanted to use. What fit us? It took
Mhm,
us, I like partials, all right, but
mhm,
the partial model just didn't necessarily work for what we needed to do for in our business for where we were
mhm.
at. So we went the hypothecation route. Okay,
Yeah.
now hypothecation may not be for somebody. Okay. All right. So get knowledgeable and enough knowledge in the
Mhm,
different areas to figure out what fits you and what you want to accomplish. That's the first thing.
mhm.
The second thing is newbies don't do enough due diligence, period.
On everything,
On
who you're buying
everything.
from, who you're
Yes.
learning from, uh, any part of it. So here, and even the experienced people don't do due diligence sometimes. And here's a perfect example. I'll share this. And this was me the other day. I saw a video on Instagram by an individual who basically says a lot of things that you think. And what I mean by that is there was a Facebook ad I saw that had a 45% annual return on investment. And I just laughed. I'm like,
Yeah.
okay, real estate. And then I did a Google, and there's this guy who does call it TikTok, Instagram, where he takes all these fund offerings and he basically deep dives into them and does research on them to basically find out, yeah, they're scams. And there was one,
Sure.
for example, he did on a company back in 2020 or 2021 that when I started my company in 2022, I was looking up this other company to kind of see what they did because I didn't know if they'd be a competitor. And I'm like, wow, these people are really shady. I knew 3 years ago that they were going to be in trouble, which now today, of course, they're under
They are.
investigation, all this stuff.
Yeah.
He knew it before then. But I posted something about him. Hey, this guy provides some like cool videos and just fun to entertain. And someone's like, "Yeah, did you know that guy was on American Greed? And the reason why he knows all this stuff was because he spent like 10 years in jail because he was like the fraudsters of fraudsters." But I'm like,
Jeez.
well, it takes one to know one
No one,
sometimes.
that's
But like,
right.
I didn't do my due diligence to realize what this guy is. But and again, I would never associate myself with this person. But he also, you spent 10 years in prison doing money fraud within real estate offerings. So basically it's like, yeah, this guy actually probably does know what he's doing. But
Yeah.
it even goes to show that no matter what it is, and the newer guys really struggle with due diligence. And one of the things that I look at sometimes when I'll get a note accepted And then the person's like 2 days later, like, okay, I'm ready to fund. And I'm like, ready to fund? I'm like, did you check title or BPO? And he's like, oh, I went online and, I did a Zillow and basically I went on the county records. And I'm like,
Oh,
okay, but
no.
and I'm the type will tell. I'm like, hey, if you're buying a note, here's what you should be doing, but I'm
Yeah.
not going to tell you how to do your business.
Right.
Um,
Right.
so okay,
So,
so you've made it through the first round of interrogations. Your score is a 96 out of 100. I docked you 4 points because the last question I asked for one mistake, and of course you gave me two.
okay. Oh,
Typical
that was a
guy,
bonus.
always
That was
gonna,
one
yeah.
and a bonus.
Oh, okay,
Okay.
okay. So I'm gonna have to bump you back up.
So I'm 104 now. So.
Okay, there you go. So a little lightning round, and I joke because when I was putting
Yeah.
these things together, I'm like, describe in one word, and I'm like, I have never, I think, ever said one word in my life, and I'm like, how could anybody else? But let's see if we can get there. So the one word to describe the current market.
Changing.
Yeah, my term would be volatile. Was the
Volatile.
term I would think of. We don't need to go into details, but people just, I think, who can understand.
Yeah.
What's one thing you've changed your mind about in the last year? Now, this can be more than one word, of course, but
Well, let's see here. How to adapt. I think that's the best thing. Okay.
Mhm,
Um, yeah, both on the real estate side as well as on the note side, there are different cycles, all right,
mhm,
in the market. And you
mhm,
need to be able to understand where we're at in the market cycle right now and where do we anticipate that market cycle going. So
mhm,
you want to be planning for going, here is it. I love Eddie to death. Here is an Eddieism. Okay.
mhm,
That is apropos. All right. You don't swing where the ball's at, you swing where the ball's heading.
yep,
All right. And so where's the ball heading? All right. And so you gotta be I try to do a better job of staying aware of different reports to know kind of what's happening in the market and where it's going. I and try to anticipate, and it's never going to be 100%, but you have a feeling for where we're at in the cycles and where the cycle's going and what changes may be coming.
mhm,
Um, and then you're prepared, all right, both from a positive side to take advantage of those opportunities as well as protecting on the downside that could be happening as well. So I think that I have probably been a little bit more aggressive, particularly in the last couple years, than what I was initially when I was first getting started.
nope. Great advice. And, I know you have all your accomplishments in life, me to thank for this, but if there
Some you have a
were
little
to
bit, you have
be,
a little bit in there.
yeah,
Okay.
if there were to be one person you would thank for your success, who would that be?
I cannot name one.
I
Literally.
That's the best
Uh,
answer actually, because I'm sitting
yeah.
there like I couldn't
Yeah.
name one person that, there's so many people,
There's so many people that I've picked up golden
mhm,
nuggets from, all right,
mhm,
because of their experiences, and
mhm,
I can put it in and draw upon that. So it's an input of
mhm,
multiple people. So I'm just humble and grateful that I have the opportunity to do this, and I'm grateful to be in the
mhm.
situation that we're at right now. And I gotta say that's a blessing from Almighty, is honest, from God for me.
Great. Well, as we wrap up this episode of the Paper Trail podcast and a little get to know your speaker with Jay Redding, who will be one of the speakers at the conference September 18th to 20th outside in Chandler, Arizona. Any final thoughts that you'd like to add or anything in general? Anything on your mind that you'd like to
Well,
share?
you being a therapist now too, huh? I would just say, I wherever you're at in this note cycle, maybe you've just heard about notes, you know nothing about it. Okay, come and learn. All right, I like the format, Chris, that you're putting together here because there are so different areas of note investing that you can invest in. And what you have to be careful of is that you don't try to do them all. Don't get the shiny object syndrome, as people
Mhm.
often get on the real estate side.
Mhm.
But come and learn and think, okay, what fits my personality? What fits
Mhm.
me? What resources do I have? All right, what can I build upon? All
Mhm.
right, and help you determine what's the next steps in that respect. And many of us would be helpful, be
Mhm.
willing to help in that respect. So that would be all that I would say.
Yeah, and here's a perfect example of that I'll share just about me and my portfolio. And previously in the last several years, we'd have a balance of performing and non-performing loans in our portfolio, and a lot of performing may have been non-performing that are reperforming, or we would pick and choose some of the performing loans that we would buy. And it was pretty easy because most of the paper was written between kind of like 6 and 9%, so you could put some discount on it and still get a decent return. But you look at the true, I'll call it like performing owner occupied type loans today, that most of them are from COVID, and they're written at like 3 or 4%, and you can't get the numbers to work.
No,
So
no, you
I'm
can't.
like, okay, what do I need to do to, again, go back to adapt, which we talked
Mhm,
about, and make this shift? And, I was honestly, and I've, it's on record, so I really can't hide from it. At times, I was not the biggest proponent of seller finance. I'd rather just sell the loan. But now it's like, oh, things have changed. My
mhm,
business has changed a little bit. Okay, do I look at seller financing or buying some of those notes? Do I look at private lending and do some of that aspect? It's like, what path do I go down? And, getting to be able to speak to people in the space at the same time, where I can go in the same day and go learn a little bit about this or that, and then talk to people and say, what's the pros and cons with each? And just,
sure.
because most conferences, again, are either strict NPL conference, seller finance conference, private lending conference, or maybe a little bit of mix, but I haven't seen any that bring all three together. So that's what I'm trying to accomplish out of all this.
Mhm. So I, I I would encourage, regardless of where you're at in your journey, to come, because your
Mm.
connections, and Chris, I know you know this,
Yeah.
you're going to make connections there with vendors that's going to help you to move forward in your business,
Mhm.
with other people who might be a perfect match. I mean,
Mhm.
we've made contacts that have elevated our business. We have made deals with other people, all right, that have been at these conferences, all right, to be able to strike up the relationship. And yeah, you may know each other from emailing back and forth or talking to a Zoom call or something like that, but sitting down with someone over dinner, over a meal, talking, getting to know each other, their personality types, all that type of stuff, that's where you forge relationships, and that's where you grow. So that's the importance of being at conferences.
And I was at a conference where somebody I've known, I met them several times. All of a sudden, I was like, oh, do you know this person? And I'm like, no. They're like, oh, come with me. Had me meet this person. And next thing you know, I just bought $5 million of loans from that person. And like, oh my Lord, like, so there's so much opportunity to network. And again, today's world of Zoom and everything else, yes, you can meet people, but still getting face to face with people is still the best way to grow your business.
Totally agree. Totally agree.
Oh,
So,
oh, Jay, thanks for hopping on this episode of the Paper Trail podcast. And for people, if you want more information about the conference, again, go to the papertrailconference.com. Jay, thanks again. And I'll actually be seeing you in a half hour on our next one. And
that's it's true.
all
So
listeners
thank
out
you.
there, make sure to leave us a like and review. So thank you all.
All right. Bye bye.
Okay.